BTFD. Did you buy the dip? El Salvador's President Bukele sure did. And speaking of Bitcoin, it is Wednesday, September 22nd, and that makes it DCA Wednesday. This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy. Happy DCA Wednesday, you sexy sat stackers. Today is Wednesday, September 22nd, 2021, and this will be our 9th stack on our journey of dollar cost averaging into Bitcoin. Before we get started, look at a couple of the vital statistics. Bitcoin is currently valued at $43,582.62, and that is up a bit from its plunge this week, all the way down to 39,000, ballpark 39,000, although it wasn't below 40 for more than a few minutes, depending on where you check your price. We are sitting at a block height of 701,745, and the 24-hour transaction rate is up a tiny bit from last week to 3.30 transactions per second. And since we spoke last, we had an upward difficulty adjustment of 3.2%, and that was about 177 blocks or so ago. And we're still down about 32.8% since our April 14th all-time high. That was 161 days ago now. Some of the things making news today, besides a sea of FUD, depending on where you are getting your FUD, Robinhood has announced that they are finally going to launch a wallet. Writing on their blog post today that starting next month, the first customers will begin testing crypto wallets on Robinhood. We will share their experience and feedback on our blog and Twitter regularly so that you can follow along and get an under-the-hood look at what we're building. They said that you can join the waiting list to be among the first to get access. So one of the controversial things about Robinhood, obviously, has been that they wouldn't let you control your Bitcoin. You couldn't withdraw it. You didn't have your private keys. And so if you wade into the Robinhood debate raging online, you can know that basically Robinhood up until this point has basically just been an IOU for Bitcoin. You couldn't actually own Bitcoin, which could be said about any Bitcoin that you keep on a custodial exchange. And so allegedly they're going to allow you to start withdrawing that Bitcoin to a wallet finally. And that will, maybe that'll put that to bed. Who knows? Robinhood could become a force for Bitcoin. They're already generating a heck of a lot of revenue from people trading Bitcoin. It would be nice if you could actually stack it for free as well. Also in the fun news, definitely not the FUD news, the Philadelphia 76ers announced on Wednesday that they will have the Crypto.com logo on their jerseys as soon as this season, making them the second team to have a crypto logo in the NBA, with the Portland Trailblazers inking a deal with crypto e-commerce site StormX earlier this year. So that's kind of cool. We don't have to watch English football to see a Bitcoin logo on a jersey. We'll have to see what that logo actually looks like. They didn't release, I guess they did release their little Crypto.com logo patch in the accompanying articles. So it doesn't say Bitcoin, it says Crypto.com and has their logo. But hey, that's exposure for the that's exposure to the I was going to say the S-Coin casino world, at least. And hey, everything's good for Bitcoin, as they say, right? Also in the news today, there really isn't a heck of a lot of actual real news out there to discuss this week. There's all the Evergrande FUD, of course, Bitcoin trending down with the entire market. You can pick your FUD of the day and determine what you think is responsible for that. But basically, Bitcoin has kind of been following the S&P 500 with the stock market closing 2 weeks in a row downward. Um, September has always been termed to be a bad month for crypto. September's often deemed to be a bad month for stocks in general, or for stocks and for the stock market as well. Even notoriously bullish Plan B uh, said that his model showed that Bitcoin was going to be down in September with a price target of $43,000. And that seems to be pretty accurate for the most part. It's certainly dead on accurate for right now uh, at 43,585 with just a few days left in the month, another week or so. But he's a lot more bullish. I think he said he expects his model reflects that the Bitcoin will be in the 60s by the closeout of October. So September just seems to be a bad month for Bitcoin in general. The previous two bull runs both had dips in September, and both of those, well, you saw what happened in 2017. October, November, and December were definitely not down months for Bitcoin until the very, very end after Bitcoin set its new all-time high. So the news, as they say, is the price, and the price, as they say, is the news. And hopefully you bought that dip. But that's not what we're here for. It's Wednesday, and it's DCA Wednesday. So we're here to dollar cost average. And before we get ahead of ourselves, what is dollar cost averaging, you might ask, if you haven't joined us before? Dollar cost averaging is an investment strategy where you invest your money in equal portions at regular intervals regardless of price. This will be, for example, this will be our ninth stack. We started on Wednesday, July 28th, and we've stacked $20 every Wednesday for a total of $160 so far, including fees. As usual, we are going to be stacking using the Cash App. Maybe one day we'll try Robinhood, and I keep mentioning that I want to try out the Strike app for dollar cost averaging as well. So far, I've used the Strike app a couple times, but mainly just to play with the Lightning Network. I haven't actually stacked on Strike. So again, disclaimer, this is not financial advice. This is just for informational purposes. And Square is not, and Cash App are not a sponsor of the podcast. I've just been using them because, as we've mentioned in the past, the fees are relatively low. They're about 2.25%. I think they've got some structure built in where the fees can vary a tiny bit, but they've been exactly the same every time we've stacked for us. They're not the cheapest trading platform in existence, but they're certainly not the most expensive. And one of the benefits is, as long as you comply with their terms and conditions, you get to withdraw your Bitcoin for free. So the one purchase I did make when I was testing out Strike, for example, was free. They didn't charge a commission. I bought $100 of the Bitcoin and got $100 of the Bitcoin, but then I also had to pay like a 28-cent mining fee for transferring that Bitcoin to the person I sent it to. So right now, that's not very much at all, depending on the size of your transaction. It's actually cheaper than I think the 45-cent-ish fee we've been paying to stack 20 cents on Cash App. But those fees are Satoshi based, not dollar based. So when the market gets a little more congested, when trading is a little busier, that number of Satoshis that you're going to have to shell out to move your Bitcoin into your wallet could be substantial. If you remember back in 2017, and of course, disclaimer, there was allegedly a lot of transaction volume that was unnecessarily on chain, whether maliciously or just out of ignorance. And that was also before SegWit. And there are a lot of things that have helped reduce transaction volume. A lot of transactions are moving to the Lightning Network, for example. So hopefully we won't see $50 transactions anytime soon, but we have in the past. And if you're going to pay $50 to move 100, that obviously is a lot more expensive than letting Cash App transfer it for you for free. All right, well, back to the whole purpose for being here on DCA Wednesday, and that's to stack that $20. As I've said in every episode, every DCA Wednesday edition that is, I chose $20 because it's an amount that the average listener, at least the average listener in the United States or Europe, should be able to come up with fairly easily. If you're in some places around the world, $20 is a lot of money. And of course, for other people, $20 isn't a whole lot of money. So again, this isn't financial advice. This is just an experiment that I'm performing, and hopefully you're following along for informational purposes so we can learn about my experiences. But you do you, and pick an amount that you feel comfortable with. The point is that you pick an amount and you stick with it, and you invest that amount consistently over time. And as the adage goes, time in the markets beats timing the markets every time it's tried. And the 210,000 block theory would certainly support that at this point in time, even though Bitcoin is still a fairly young monetary system. It seems to, the number go up technology seems to be consistently following Plan B's stock to flow model, for example. But again, do your own research. You do you, and we're going to stick with our $20 weekly. And along those lines, this is going to be our 9th stack. We've stacked $160 so far, including fees. We've purchased at a variety of prices from as low as $38,000 to as high as $49,000. But our average cost basis is $46,074.72. And that's not horrible. It's down, obviously, because Bitcoin is down significantly. But again, dollar cost averaging is a long-term play. So over time, hopefully we will see that our average cost basis remains lower than whatever the current price is at some point in the future. And we're talking months or years down the road. Again, we intend to stack $20 every Wednesday, as I say, until Bitcoin goes to zero and collapses. We all get filthy stinking rich, or you just get bored and stop listening, or maybe I'll modify that a little bit and say until we've at least just made our point and we all have our stack. So without any further ado, let's open up our Cash App. If you don't have Cash App, there is a referral code and a link in the show notes. If you use that referral code, you'll get $5 free for signing up, and we'll get $5 as well, and that'll help the podcast out a little bit. But pick your app, and we're going to open Cash App. I don't have money in the Cash App as usual. I don't usually like to keep a lot of money on Cash App, so we're going to add the $20, and I have a debit card linked to my Cash App, so it's pretty much instant. Boom, there it is. It says you've added $20 to the Cash App. The latest version of the Cash App has some really neat Bitcoin improvements. One of the things I didn't mention is that you can now schedule, in addition to scheduling your DCA purchases, which, as you know, I don't do because I like to manually purchase. There seems to be something satisfying about that. But in addition to that, you can now set custom purchase orders, like stop and limit order type deals, where you specify a price and it won't execute that trade unless Bitcoin hits that price. And I haven't played around with that yet, but I just saw that pop up in the last update to Cash App. So if you're running the latest version of Cash App, you might want to check that out. In the meantime, we're going to do the standard one-time order. And look at that. Last DCA Wednesday, I had mentioned that, as usual, we have to enter 20 because they don't have 20 as a default investment amount. And then they did. But apparently they don't anymore. They just have 10, 25, 50, 75, and 100. But of course, the ... on the bottom right means you can enter whatever you want. And we're going to enter $20. Click Next. It's thinking about it. It says confirm your purchase. We're going to be purchasing... we're really going to be purchasing $19.55 worth of Bitcoin because there's that 45-cent fee. So for a total cost of $20, we're going to be purchasing at $43,560.61, and that's going to get us 44,088 sats. Click and confirm, and run a little slower than usual today. Boom, there it is. You've just purchased 44,880 sats. And that's going to take our average cost basis from $46,074.72 to $45,901.74. So just that one purchase dropped our average cost basis by $172.98. So you can see how already how, even though we've only done this 9 times, dollar cost averaging has kind of smoothed out the bumps. our cost basis isn't a dollar per share like Max Kaiser or whatever, but it's also not $64,000 like the all-time highs. So again, dollar cost averaging is a long-term strategy, but we're starting to see it play out. I mean, you can already see it starting to take shape if you look at the details. Hey, if you find this content useful or entertaining, or if you're just feeling extraordinarily generous, there are a number of ways you can help support me in this podcast. The most obvious one is if you don't already have Cash App, there is a referral code in the show notes. And if you click on that link and set up a new Cash App account and follow their terms and conditions, you'll get $5 just for trying them out, and we'll get $5 as well. I've written several books, but the one you might know that's most relevant to this podcast is Understanding Bitcoin for Noobs, and that's available on both Amazon.com and BarnesandNoble.com. Obviously, purchasing either of my books would help support the podcast as well. And you can also support the podcast directly through the Anchor.fm website, and they include a support link automatically in the show notes. And last but not least, we also include a Base32 Bitcoin address in the show notes if you feel like helping us out by contributing Bitcoin. All right, that's going to do it for this edition of the Bitcoin Bulletin Podcast, Dollar Cost Average Wednesday edition. Don't forget to join us next Wednesday and every Wednesday as we continue the journey. Once again, thanks for listening, and keep stacking those sats, you sexy sat stackers.